2 years into the current administration, and I guess it's time to take a scorecard. Where actually Prime Minister Modi and his team, they've delivered, surprised, and where have they disappointed? What have they done things which were different? And in a global environment where growth has been quite precious, has India been a real standout gainer? What about impact of commodity prices and how that really has helped the Indian economy to heal? So let's debate and discuss all that and much more with two veterans who need no introduction whatsoever. Rashesh Shah, Edelweiss, Ashok Wadhwa, Ambit. Gentlemen, so good to have you back on ET Now. Thank you for joining us. What is the good news and what is the bad news?
Well, I think, the most important thing is to first realize that India is an integral part of the world economy. You can't be isolated. Therefore, I would say, look at where the emerging market economies were 2 years ago and see where those economies are 2 years from then, which is today, and where does India stand in comparison. And I would argue that on almost every front, whether it is economy, whether it is currency, whether it is attraction and interest of foreign direct and FII investment into a country, India would certainly outscore every other emerging market. Purely on that objective count, I would say that we have done well in these 2 years. Now, there are bound to be areas. I always say that Indians are brilliant mathematicians and technology people. Both mathematics and technology require precision. Unfortunately, neither economic problems nor politics works purely on precise solutions.
Rashesh, let me take the clock back. May 2014, the day Prime Minister Modi got elected, there was a sense of euphoria, there was a sense of excitement. May 2016, do you think expectations have played on expected lines?
I think, as you earlier asked, good news and bad news. I would say if you look at the last 2 years, a lot more good news than bad news, I would say, on balance, if you add up the whole thing. Including, obviously the obvious things like the macroeconomic stability and the fiscal consolidation. You can argue oil price helped, but the fact is government used it very well to ensure that the macroeconomic stability we are seeing right now is something India has not seen for a long time. Current account under control, fiscal deficit under control, inflation under control, all of that. Along with that, actually, there are a lot of other things which are not so obvious. Like the current parliament session that ended has been the most productive parliament session for the last 4 years. A lot of the bills have got passed. So though we think parliament is not functioning well, a lot of the bills, things like the bankruptcy bill, the real estate bill, all these are fairly big achievements. So I would say a lot of those expectations have happened. I think there was a section which thought there'll be rapid reforms and we might go into a Ronald Reagan, Margaret Thatcher kind of an era, and there'll be rapid dismantling of the government involvement in the economy, which I would say correctly, largely the government has been more gradual.
The problem with movies is that you don't know the end. Will it be Leela Bhansali end or will it be Karan Johar end?
Well, unfortunately, as you said, you have to wait until the end to know what the end is. But if you were to try and preempt how the end looks at this stage, the government began on a relatively slow path. And I guess partly because the government didn't have the experience that some of the predecessor governments had, and partly because I guess nobody fully understood the quantum and the impact of the situation that the government had inherited. I doubt whether the finance minister or his government knew the type of challenges that the banking sector, for example, was facing at the right beginning. And I heard people say, why is he not acknowledging? Well, you can only acknowledge once you sit on the seat, experience it, and then, of course, try and find solutions around it. So I would like to believe that if you see where it all began and where we are, which is nearly at the interval stage, looks like the government seems to have had a proper assessment of the challenge and seems to be outlining solutions in a proactive manner now. And if they have truly preempted all the problems and if they are able to find the solutions as we think they can, the end should be a good, happy end.
So I'm actually reminded of a quote when you asked this question. So maybe it's a good time to just, go back to that. There's a very famous quote about India, which says, in India, everything works out in the end. If it hasn't worked out, it is not the end yet.
Yeah. So, Rashesh, what would you say is the original and the big game-changing idea of the current government, which really has surprised you as well?
I think the one that they've been truly focused on is this rule-based system approach, because India historically has been very discretion based. Government ministers and bureaucrats dispensed decisions as either favors or making decisions on the go. And I think the last 2 years this government has systematically put rules in place, right from the auctions to doing auctions for all the mineral rights and all, rather than government giving discretionary. We have government as discretionary seats on Air India. Some minister can give you some seats to schools and colleges and clubs and petrol pumps. So India has historically been a very discretion oriented system, and discretion leads to arbitrariness, corruption, all those other bad things that happen. So I think this government has shown, I think last 2 years there has never been one instance where they have said we want to be more discretion based rather than rule based. And I think a lot of people thought that once this government came in, once the reforms get implemented, a lot of these things will, the spin-off benefits will come out a lot faster. I think this government has focused a lot more on long term rather than short term, which has its own issues. And as all of us who also run organizations, we know you have to balance the long term and the short term. But at any point of time, if you focus a little bit more on the long term, some short term goals will get missed. And I think there have been some short term goals like investment and jobs and all, which are slightly behind schedule. But on the whole, I think the structural approach of becoming a rule based, policy based system rather than a discretionary based system is a great change for India.
Ashok, the ultimate measure of any government functioning is growth. And the way to look at growth is either we look at earnings or we look at productivity levels. The cost of capital has come down. The ease of doing business has become better. Crony capitalism is out of the system. It is now easy to start and commit capital. Yet if I look at the private sector capex and capacity utilization, it is still very low.
Well, clearly that's been one of the big disappointments. Government's inability to create a positive sentiment and motivate private sector to start a capex cycle is a one big miss, I would argue, for this government thus far. I am sure the government is aware of it. Prime Minister's Made in India program, his commitment to create jobs are both largely dependent on this one very important factor. So no debate that this is a big miss for the government thus far. Is it partly because the government policies have not been favorable? I don't think so. I don't think it's got to do with government policy making. I think it's partly to do with, as Rashesh said, events around the world. When demand contracts around the world and China has so much overcapacity, people are going to be very concerned about whether they need to incur capex at this time and increase capacity, or is there a smarter way of being able to import things cheaper and being able to sell them. And I think currently we are facing a situation where partly because of a low Indian economic sentiment, but largely overcapacity globally, that cycle has not begun, and that's a worrisome issue for us.
Rashesh, it takes 9 months for a baby to be born, and before some of the government initiatives would kick in, it could take some time. So when do you think the benefits of a Uday scheme or Indradhanush or the fact that government is trying to clean up the banking sector, when will we see visible recovery?
I think everybody is hoping that around 18 onwards, we will start seeing the fruits of all these structural changes that have happened.
That could be too close to the general election.
It will be close to the general election, but it's a 5-year cycle, and if you do some things in the first 18 months or 2 years, you hopefully will see the benefits of that in the last couple of years. But I must also say some benefits are already being seen. Like this is one of the first summers in India, which is very hot. And we are not talking about power shortages. There are still problems in the water front in Maharashtra and other places. But on power, we have not seen one single report that India is short of power in these summer months, which used to happen every year. So obviously some things have improved, on the ground. I think even if you go to West Bengal and Bihar, power is slowly becoming a smaller problem. But I would say, all these things about ease of doing business and all that are very important, and we'll start seeing the results of that. Like for example, the bankruptcy code itself. Very few of us know that the bankruptcy code, having it in place, will make India jump by 13 to 14 points on the ease of doing business ranking. So all this will help, but it will take at least another 1 year for the first case on insolvency to go through the new system of the bankruptcy code. So again, we'll be somewhere in the middle of 17 by then. So I would say around 18 onwards, hopefully we should see the fruits of this, with the caveat that subject to global economy at least staying where it is, not getting worse from where it is now, because I think we all underestimate how integrated we are to the global system. And in India we are insulated. We don't realize how bad things are outside of India. And hence, I think we should keep that in mind, because that will continue to act as a drag, either by our exports slowing down or foreign investments be slowing down. And the last thing we have to work, and that I think is very important in the last 2 years of this government, is not just ease of doing business but cost of doing business. We still have to bring cost of doing business in India down. If you look at India, the land cost, labor cost, capital cost is still relatively higher than it is anywhere else in the world. It's got cheaper than what it was. So as you said, interest cost is lower now than it was a couple of years ago, but it's still one of the highest real interest rates in the world. So we have truly very high real interest rates as compared to other parts of the world. So when you add up all that, I think we are winning the war on ease of doing business. But the corollary to that is the cost of doing business, which means infrastructure efficiency, which means a lot of the state level bureaucracy going away, because you might have center which has reformed, but the states also have to become a lot more efficient. And I think that hopefully I'm hoping to see by 18-19, but I think we may not see that. We will see the efficiency result from the center's actions. But the states are, I think, following through a lot slowly than I would have expected.
20 minutes into the discussion, I have not used the word GST, something I would start my discussion with. So do you think GST is a sufficient condition but not a necessary condition for economic growth?
Well, GST is certainly important. Integrating all the laws will not just bring in greater efficiency in tax collection, increase tax collections, which is a must for our fiscal deficit to remain under control, but I would also argue would add to ease of doing business in India without doubt. So I would say sooner or later it will get done. I think GST is one economic situation that's stuck in the politics of this country at this point of time. But listen, if the bankruptcy law can be cleared in a space of 6 months, I think it is fair to believe that rational thinking is prevailing across both sets of parliaments, and that sooner rather than later GST will get implemented. I'd like to believe that it can happen in the next 6 to 12 months. But do remember that once GST is implemented, it will result in short-term chaos. It will result in short-term duplication of taxes. It could even result in short-term negative impact on the GDP. But then look at it 3 years out, and I think it will certainly contribute handsomely to both ease of doing business and to our GDP.
Pretty much what happened when you're trying to cut out black money. I mean, just cuts the vein of liquidity.
I agree with you. I mean, the attack on black money is one other sustainable achievement, I would say, on part of this government. They said it as a part of their pre-election manifesto, and they have continued with that aggressively. It has resulted in weakening the sentiment. It has perhaps resulted in flight of some capital. It may have even resulted in flight of some entrepreneurs. Again, the short-term impact of it is negative, bound to be negative. But I would believe that if India has to sustain its growth and create a level playing field between the way business was done earlier and the way business ought to be done now, I think it's the right action. And therefore, again, don't worry about the short-term impact of some of these issues. These are structural issues. These are important resets. I'd like to believe that just like Dr. Manmohan Singh in 1991 began a reset which redefined how business was going to be done between foreigners coming into India and Indians operating in India, this reset is going to redefine how business is going to be done in India between those who did business in a relatively flourishing manner and those who will now do business, the newcomers, in a more flourishing manner.
Rashesh, we tend to talk about the mega campaigns, Made in India, Swachh Bharat, Smart City. But there are a lot of game-changing ideas which have got incorporated in the financial sector as well. Jan Dhan is one big scheme. The fact that there is a bankruptcy law in place now, they're trying to really change the dynamics on how PSU banks would be lending. Now, it could be clubbed under a popular scheme called Indra Dhanush, but the attempt is really to fix there. So do you think rather than getting carried away with these mega schemes, we should also focus on individual things which have happened for the financial sector?
Absolutely. Actually, if I look at the financial sector,
I mean, it's got a lot actually.
Yeah,
and we tend to ignore it.
I think reforming the PSU banks is a major step. Even taxation reforms are fairly big. I mean, no government has had the guts to look at the Indo-Mauritius Treaty and clean up that ambiguity or that loophole that continues. I think this government has had the courage to address that and get that out of the way. So whether it's on the tax front, whether it's on the banking front, I think the insurance FDI. So we all talk about GST because it is not getting passed, but nobody talks about bankruptcy code that got passed. I think bankruptcy code is going to change how banks and financial sector works in this country. I mean, how industry works will also change, but that whole thing will change. So I think the bankruptcy code, the tax reforms which are going on, I think refunds on tax, the clearing of the old, claims that are going on tax, a lot of those things have happened on the ground. I think the banking sector, the bond market, even what RBI has done, and I think the government and RBI has worked in conjunction on a lot of the financial sector reforms. Small banks, payment banks, now on-tap banking license. This is path-breaking. In last 2 years, we have done more than we have done in the last 10 years as in whole. So I think a lot of things have happened. They will result in efficiency and growth and all of that. We need a little bit of tailwind from the global economy and a little bit of tailwind from the rain gods as we go along.
And perhaps one more thing, the Prime Minister and his party need to rein in these factors that are, I would call marginal factors, but that cause disruption from time to time because they want to be heard and they want to be heard for the sake of being heard without necessarily contributing any substance to the issue. So I think somewhere, the government, the Prime Minister and his party need to address these marginal factors because it's a serious distraction. It takes away from all the good work that the government is doing.
But it will always be there. I think a democracy is always very noisy. We see in India, but you go to the US and you see there are enough gadflies and there are enough marginal, people making claims. US has gone through its own, Occupy Wall Street.
We continue seeing it
the
every
Tea
day
Party. It goes on.
See it more till the final verdict is not out.
It is part and parcel of a vibrant democracy. And I think we have to learn to see the signal from the noise. So there is a lot of noise in India, and India is one of the noisiest country that has been there. Whether we look at stock market, capital market, there is a lot of noise you encounter all the time. But there are also signals which are there, and the ability to focus on the signal and not get distracted by the noise is what we as investors and as the corporate sector need to be able to achieve. India will always be like this, and I don't think in the last 25 years of my career in India, I've seen a calm India. I've never seen a good, everything is going well kind of in India. India will always be like this, 3 steps forward, 2 steps backward, 1 step sideways, and to make any meaning out of it. But if you look at the trend over the last even 20 years, the Indian economy size was $300 billion 20 years ago. We are now $2.1 trillion. We have grown 7x in absolute US dollar terms, with the rupee falling from 25 to 66 in the same period. We have grown 7x in 20 years in absolute US dollar GDP terms. So India has evolved in spite of all the noise and all these other things that have been going on. And I think that is what people should focus on. And with this government, if anything, in the last 20 years, this has been the most, reform, progress-oriented government from an environment business point of view.
Okay, so let me get closing comments from you. Ashok, India has this natural growth, the Indian GDP growth, the Hindu growth rate, which is about 4 to 5%, and that's natural irrespective of the government action. Now, there is a serious case for Indian economy to take a leap forward. Global conditions are favorable, commodity prices have come down, a lot of government action has kicked in. So when do you think we will genuinely break out of the pack?
Well, as I said, if you think about us as a part of the emerging market pack, I think that important and big step has already been taken. The manner in which India has retained its trajectory while others have lost it over the last 2 years is a clear indication that India does not belong to that pack anymore. 2 years ago, 3 years ago, if you went out and spoke to a potential limited partner to say, we are trying to raise an India specific fund, they would say, you know what, we don't like country specific funds, we like emerging markets fund, we like Asia Pacific fund. And it's interesting how in the last 3 months that language has changed completely, because more and more LPs are saying, is there an India specific fund? Because we don't believe in the emerging markets and we don't believe in Asia Pacific anymore, but we still believe in India. And I think that's perhaps the best validation of India having stepped out of that pack today. Coming to the rates of growth, we have demonstrated ability to get to double digit in the past. There is no reason why the changes that this government is effecting will not enable us to get there again. My worry still continues to be corporate earnings, and they continue to remain a wee bit muted for reasons that we have spoken. And the only thing I would say is that global factors need to be more favorable, not just from a commodity price perspective, but from a demand perspective. We've lost exports 16 months in a row. Why is that happening? We can blame it a bit on ourselves, but we cannot ignore the fact that the world demand is contracting at this point of time. And unless some of those other macro factors which rule the world are positive, I think it'll be difficult for us to get to a double-digit growth. Having said that, the finance minister has already predicted that this year the growth will be between 8 and 8.5%. And listen, if we get there, we should be delighted.
And on a large base like this,
yes.
Almost a $2 trillion economy.
$2.1 trillion economy. Yeah. It's a huge growth base.
Let me get closing comments, and I'll keep this question constant with both of you. Ashok, as an entrepreneur, you can cut the noise, you can take risk, and you love to invest. So what is the vision 2020 for Ambit? Where are you investing right now? Where are you confident and where are you hopeful of big returns?
So, we've just, as a matter of fact, interestingly completed our vision 2020. And we remain quite optimistic about where we are and where we think we can get to. Clearly, we are a full-service investment bank, and that's going to be our core area of growth. But the two areas where we think there are specific opportunities to grow will be the whole lending business, where I'd like to believe that non-banking finance companies continue to have a very interesting opportunity, despite the fact that there are small banks and payment banks and new banks on the tap. So I would say that's one business area where there continues to be a lot of growth opportunity. And the other one which we've just launched is our asset reconstruction company in partnership with JC Flowers. I mean, this is the other side of a weak banking sector, or this is the other side of corporate India having got so much stress on itself. It gives an opportunity. I think the bankruptcy code and everything else that Governor Rajan has announced gives a lot of hope and future for what has been a very active participant in other global economies. Asset reconstruction companies addressing stressed assets. Listen, people will take decisions, businesses will fail. There has to be a mechanism for new entrepreneurs to step in. Because these are not businesses where the assets are bad. These are businesses where the liquidity is relatively poor. You inject exactly, the cycle has gone wrong. You give it breathing time, you put in more equity inside it, you give it fresh funding. And I think there is room to believe that all these assets will become quite productive in times to come. So I would say those would be the big opportunities for us.
Rashesh, let me get one area from you where you're reasonably confident of big returns.
I personally think financial services, especially now, are at a very, very important...
It's a very broad...
No, I'll come to that. I think at a very inflection point overall. And whether it's credit, because I think the ability of the conventional, traditional banking sector to address the credit needs of the economy are falling short. And in the last few years, we have seen microfinance companies, a lot of others come in. I think the credit needs of the economy are getting more complex. So NBFCs, non-banks, everybody will have and I think credit will be one evergreen steady business for the next 20 years. And all forms of credit, wholesale, retail, all of that. In credit, I'm the most optimistic about is housing finance. I think the housing finance as a sector is still very, very underpenetrated in India, and the need for housing, and now with the real estate bill and all, housing costs will come down. We are seeing housing pricing become more and more affordable, and I think there is going to be a flood of Indians, especially given the median age of 28 years old, who are going to be buying housing and houses, and they will need funding for that. So I would say if you ask me next 10 years in credit, what is going to be one big opportunity is going to be housing finance. But I would also say that currently, as I said, the Indian banking system has got stretched because it's been a very old model. which is changing rapidly. Along with that, global banking is going home. Every banking regulator is saying, my home bank should be home only. I don't want to take a global risk. Being a global bank in 80 countries is no longer an advantage. It is a disadvantage. The complexity and the regulations. So we are seeing that global banking is going home, which opens up a vacuum in India again. And thirdly, we're seeing global capital is becoming global. So I was in Australia. Australian superannuation funds want to come to India, and banking needs capital. So we have global capital available, global banking that is going back to the home countries, and we have the conventional Indian banking system which is leaving gaps. So and that is creating this massive opportunity in credit. But along with that, I would say advisory services like asset management and wealth management is an empty space in India. India is just seeing the early stages of that. India is where the US was in the early 80s.
Oh, I thought you'll say 2000.
No, actually, I would say an interestingly correlation. The US GDP was about $2 trillion in 1977. It became $5 trillion in 1988. 77 to 88, US went from 2 trillion to 5 trillion. India is currently 2 trillion, will be 5 trillion by 2025. The next 10 years, India will go through the same kind of evolution that the US went through about 50 years ago. So it's interesting to go back and see how the housing finance and the mortgage industry and the asset management, wealth management industry evolved at that phase in the US, and a lot of similarities could be applied to India.
Gentlemen, we leave it there. Really appreciate your time. Now it's a judgment call whether you should have a glass half empty approach or half full approach. But frankly, the word euphoria has got changed with opportunity. It may not be, we may be growing at 7%, we are not feeling like 7%. So I don't know when Achhe Din will come, but I'm sure the economy is headed in the right direction. We're healing properly and we managed to break out of the pack. Thank you.
Very good.
That's it on this edition. Thank you for joining us. Thank you for watching the show.